Hello traders, Gary Wagner with the Gold Forecast. The very last day of the year, 2010, December 31st. It is the last day of the decade, and we are witnessing a New Year rally just as I predicted in my article for Kitco.com on the 29th this month. Gold trading higher this morning, up about $15. It is currently trading at $14.18, $14.19. On today's report, I'm going to talk to you about my outlook for the metals complex, gold and silver, a little bit, and I'm also going to wrap the year up, all here on today's daily report. Traders, with 2 hours left in the trading day, the trading year, and the trading decade, we are looking at a 179-minute candlestick chart, and you can see quite clearly how some of the areas that used to be resistance have at this point tentatively become support. As you can see, these two areas, this top right in here, this is at 1408, and this bottom that we formed the other day, without a doubt, is showing me some very, very strong support. I am very excited and pleased about the performance that we did witness this year at the Gold Forecast. Gold moved up roughly $300. We were able to take almost $450 out of that same market. So we were able to outperform gold by about 50%, which is quite a task considering what it's done. In terms of my outlook for next year, I am extremely excited. And what I'm excited about is that at this point, I am absolutely convinced that we are at the beginning of a new market rally, a new market cycle. Now, we are back at our daily chart, and what I'm looking at is some of the possible scenarios in terms of targets and time parameters. What I have done here is this is that first wave that we had in the last bull cycle. This is what's called a scalable line. So as I move it, it will move with the market itself. If we tag that to this point here, you can see that my projection for the top of wave 1 falls right in here, and if we carry it over, you'll see that my first projection that I'm looking at is around 1450. Now, obviously, before we get there, we are going to need to take out these record tops here. But my sentiment is that this, once we take out this top, and I'm looking at that quite early beginning of next year, I think that this will take us to wave 1 right up in here. Traders, we are looking at a daily average chart, the Heikin Ashi, a Japanese average chart, and we do have a smaller candle here. The wick is a little bit larger, but it is still showing us a defined uptrend. Now, of course, we did exit our trade in profits yesterday. In hindsight, we left $15 on the table by not staying in today. My rationale, though, was that I wanted to remain flat over the holiday New Year's season. So if there is any kind of fundamental activity that happens that could be detrimental to our position, we weren't sitting exposed, as the market can gap higher or lower when it is closed for that period of time. That was my rationale. But it does remind me of a story, and it's a good story to kind of end the year with. There is a gentleman by the name of Herbert Hoyle, one of the most successful stock traders of the 1950s in the U.S. mainland. He was interviewed, and the reporter asked him what he attributes his success to when so many traders are unsuccessful trading the market. He paused for a second, thought about it, looked at the reporter. He says, well, I think the reason that I consistently make money is I always sell too soon. This has been Gary Wagner with the Gold Forecast, wishing you, as always, good trading, a very, very happy, healthy, and prosperous new year to all of you. We'll talk to you next year. Bye-bye.